Hi, I'm Chris Demasi. Welcome to this week's Video Insight. Today I want to take the opportunity to talk to you about company reporting and specifically Apple's latest result. Periodic company reporting is often a source of much excitement and activity in the business and the investment community. It's a time when corporate managers have the opportunity to update investors on the progress of the companies they manage on the investors' behalf. Here in Australia, most companies listed on the Australian Stock Exchange report their financial results to the market every 6 months. In the US and in Europe, a 3-month or a quarterly cycle is commonplace. So what do companies actually report? For the most recent period, each company will report accounting profits, a statement of the cash that came in and the cash that went out, and a balance sheet which shows the assets and the liabilities of the firm. But that's not the only information provided. Many companies also break out their financial results by key segments, product lines, regions. Senior management also give commentary around the progress of the business and the outlook ahead. In fact, management usually present thoughts and respond to Q&A on a public conference call conducted soon after the press release is available. So then what do we do at Montgomery? Well, the Montgomery team redoubles its efforts every 90 days to mine through the reports and to listen to the calls of each company in both our long and our short portfolios. We also work tirelessly reviewing the results of the peers, the competitors, customers and suppliers of our portfolio holdings around the world in pursuit of additional insights. The greatest challenge we face, therefore, is not a lack of information, rather it's filtering the vast amount of noise from the rare and often powerful signals. Often there's not a lot that changes from quarter to quarter in the context of a multi-year investment in a company. However, it is imperative that we know everything that is knowable about the businesses we're exposed to and that we identify any changes in their prospects immediately. A thorough review of the results is a necessary condition to producing great investment returns. So what about Apple? Last month, Apple reported results for its third fiscal quarter. Sales and earnings were down, but this was expected given the natural cycle of iPhone releases and customer upgrades. The official report told us that sales for the period were a whopping $42 billion, albeit a 15% decline from the same period last year, and that the operating profit margin was 24%. But the prima facie decline was factored into our expectations and those of the market. So we went deeper for greater insight. Listening to management, we learned that Apple was able to perform better than was expected in spite of retailers running down stocks of higher-end phones and restocking the shelves aggressively with the new SE, a smaller form and cheaper iPhone. The most important piece of information was not the headline sales number. Rather, the take-up of the SE has been extremely strong and is bringing in more new iPhone customers at this point than any other previous version of the product. We also learned that iPhone sales to people switching from competing phones are at their highest levels ever. More people continue to join Apple's regular leasing and upgrade program, and Apple is growing its installed base of iPhone users at a double-digit percentage rate. Away from iPhone sales, this result bodes well for Apple's burgeoning services business, which includes the App Store, iTunes, Apple Music and iCloud. The services business set a sales record of $6 billion in the quarter, representing 19% growth from last year, as the installed customer base spent more than $10 billion on apps, music, storage and other services. Earnings season has enabled us here at Montgomery to update our view of Apple against our core thesis that the company is a strong platform business with network strengths embedded in its ecosystem and the ability to strongly grow recurring revenue streams. As an added bonus, Apple reported a $146 billion cash pile and the stock still trades on a single-digit PE multiple. Thanks for joining me today, and remember to follow us on Facebook and on Twitter.